Well, hello everyone, and a very, very warm welcome to our webinar today on how to add value to compliance. I'm delighted to be with you today. My name is Colin Dunn, and those of you who know me, I am a director and an owner here at Proactive Accountants Network. Those of you who don't know me, may be useful for you to know that I am in fact one of you, meaning that I am an accountant. And as such, I think I'm able to offer to you a unique perspective on how you can truly add value to compliance in a way that sits very, very neatly with your heartland, and by that I mean by staying very, very close to the numbers and the sorts of things that accountants are very, very good at and do on a day-to-day basis. And so on our webinar today, I'd like to start by talking about some issues that are occurring in the accounting profession, and some issues that are occurring within your client base as well, and then think about how we can marry those two issues up, because I think there's a sweet spot that proactive accountants can really step into to add enormous value to your clients. After I've done that, I'd like to give you a process that you can take and implement in your firm and essentially bolt on to the core service that you offer, being the compliance service. As a result of bolting on that, those additional services, I think it'll give you a bridge into which you can, over which you can step, so that you can extend your service from compliance work into offering truly valuable services to your business clients. And so, as we go through the day, or through the webinar, should I say, I'll be talking about this convergence that's happening as a result of some changes that are occurring that I think are going to bring you and your clients closer together. But a word of warning for all of you on the call, this convergence will only happen if you make it happen. And so there are certain things I'll discuss that are happening irrespective, but there are other issues that you need to take some action on to ensure that you're part of this convergence and you end up in the right place to help your clients as we move forward. So delighted to have you again. We've got well over 200 registered for the webinar today. Please, if you've got any questions, just drop them into the little chat box and I'll handle them as we're going through. So let's begin. And specifically where I'd like to begin is talking about what's happening in the accounting profession, and then talking about the issues that are facing your client base. And then once we've done that, I'd like to talk about what I refer to as the glue that is really pulling you closer together. But that glue will only pull you closer together if you take some steps to make that happen. So let's begin on the left-hand side here by talking about the profession itself, of which I'm a proud member, as all of you on the call. So let's think about accounting. And what essentially is accounting? Well, I don't want to be too direct, and I certainly don't want to offend anyone on the line today. But the reality of the situation is this. 90% approximately of the work that is done in this profession, as in the accounting work that's done, so on a day-to-day basis, 90% of the work that's done for clients could be summed up in a couple of words: checking and lodging. And so we get information in, we check it, we make some adjustments, and then we go ahead and lodge that information with the tax office. There's a real problem here. And the problem is that if you think about those two things, so the checking and lodging part of what you do, the problem is this. Where does the client place that work on this particular grid here? And so this grid, double-axis charts, looking at urgency on the left-hand side and importance on the bottom axis there, taken from the work of the late Stephen Covey, who was very, very influential in helping business owners get focused on what they need to do, what they need to focus on. He wrote the great book, The 7 Habits of Highly Effective People. And if you think about that checking and lodging, if you think about the work that you do on a day-to-day basis with your clients, where would they put that sort of work? And I put it to you that most of them would put it to the left of the line. And so I had a firm last week saying, I don't agree with you. I think we're very, very important. Well, I have to say, team, that that importance may be more in your eyes than in the eyes of the client. And so when you're thinking about these issues, always put on your client goggles, your client eyes, and think about, if you were a client, what would they say about the importance and the urgency of what you do on a day-to-day basis? You see, some clients, those who are organized, bring their work in early, you process it, they would put you right there in quadrant 4, and so there's no real urgency. They're not running up against deadlines. There's not a great deal of importance other than they might get a tax refund as a result of doing that. And so, you know, that they're right down there, bottom left-hand quadrants. There are other clients who some of you are dealing with right now, especially those of you in Australia, running up against deadlines. And so whilst the work's not that important as far as helping them run their business goes, it's pretty urgent. And the tendency of the accountant in this situation is to drop everything. And, you know, because it's urgent in the eyes of the clients, then we drop everything and make sure that we get that work done. Now, that's very noble. It's very admirable, and so on and so forth. But, you know, I hear from accountants around this time of the year, my numbers are down, my KPIs aren't great, and that's because we're getting all the rats and mice in, the little clients, the ones who are a pain to deal with. We can't charge them as much. Well, if it were me, I'd be doubling the fee. But there you go. That's a discussion for another day. So I think we're on the left-hand side of this line with most of the work that we do, and what we need to focus on here is how do we move towards the right? How do we become more important in the eyes of our clients? And that's where I'll spend the preponderance of this webinar in giving you some ideas as to how you can do exactly that. See, the problem is this. When most of what we do is checking and lodging, that becomes repetitive. And it doesn't take Einstein to figure out that repetition leads to systematization. And wherever you have systematization, you have the ability for automation to step in. And all you have to do is look at the accounting software that's out there now, and it can very, very intelligently figure out what transactions should be coded where. And any of you using any of the cloud accounting software, you'll know this. And you know, BankLink's been doing this for many years. Feed comes through from bank, and the client essentially could automatically code that, having figured out once where that needs to go to. Where you have automation, that will lead to commoditization. And commoditization always leads to two things. So firstly, price pressure, and secondly, competition. And so this big issue that's occurring right now with the commoditization in our profession is a big issue, and we need to deal with it somehow. And I want to give you some thoughts and some ideas as to how you can do that. Now, alongside of that, still on issues facing the profession, alongside of that, we have deregulation. And we have a drive to deregulate everything. I think over the last 10 years, there's been too much regulation occurring. And now people are saying, hey, come on, let's deregulate. Let me give you an example of that. This doesn't happen overnight, by the way. This could take many, many years for this to make an impact. But when I first started as an accountant in 1987 in the United Kingdom, every single limited company had to have an audit. And so audit work was the bedrock of most accounting businesses, even small firms, heavily involved in audit work. Now, if you're in the UK, you need to have a turnover of £5.6 million or more before you require an audit. Now, I reckon that takes about 98% of businesses out of the audit regulation area. And so accountants are having to reinvent themselves and find new things to do. Alongside of that, we've got tax and the potential for tax simplification. And what you'll see on the screen here is an example in Australia. So Wayne Swan backs plans to simplify Australia's taxation system. You'll see down here, millions of taxpayers would merely have to tick a box and lodge their return online in order to receive a refund. And Mr. Swan said that Australia is the biggest user of tax agents in the world. And certainly in my home country of the UK, last time I looked, fewer than 30% of taxpayers had to file a tax return. And so a lot of that sort of work being taken away from accountants as well. Now, I should say that this report in the Herald was in 2009, and so, as you all know, the wheels of bureaucracy turn very, very slowly, but this is on the political agenda. Those of you in New Zealand today, similar sort of thing, here in the Herald last year, so a bit more contemporary. What we're saying here, or should I say, what the Institute Tax Director Craig McAllister said, was we propose a rule of one for small business, so no more than 1 hour, one return, one payment each month for income tax and GST compliance. And by our calculation, that's thousands of hours freed up from compliance to focus on what small businesses do best. Very important. It's happening. Here is my favorite office of Her Majesty's Treasury in the UK, the Office of Tax Simplification. And so a body set up to focus on and investigate how the tax system can be simplified even further. And this is spreading. And so I was actually, believe it or not, when I am an accountant, I was on the Office of Tax Simplification blog just recently, and I saw a blog there about simplification in Canada. So the same thing's happening there as well. And here you see Jeremy Sherwood was speaking at a conference on tax simplification organized by the Canadian Certified General Accountants in Toronto. So this theme seems to be going global. And no, it's not going to happen tomorrow, but it will happen over time. What does that mean? Well, some services that you're providing today will not be there in 5, 10, 15 years' time, whatever it may be. And so we've talked there about commoditization. We've talked about deregulation or simplification. The other issue we're facing is cloud accounting, technology. And so the question I have for you is cloud accounting friend or foe? And essentially, you know, if you think about it, the customer for the cloud accounting software providers is not the accountant. The customer is your client. And that's where they're going to. And so at a recent partner brief of one of the leading cloud accounting software companies, what they said was in April, so this month, in Australia, you'll be able to lodge tax file number documents directly from within their application at the click of a button, as in your clients will be able to do that. They'll be able to lodge BAS returns in June directly from within the application. They'll be able to lodge tax returns from July directly from within the application. And many of you will say, well, that'll never happen. You know, our clients aren't stupid. They won't lodge it without asking us first. Well, I would put a slightly different argument there. Some of them may well do that. They may say, oh, great, we can now just do this ourselves. Therefore, why do we need the accountant? Unless you are explaining to them how you can add value, then why wouldn't they do that? Where's my evidence for that? Well, here's a sample size of one, but a comment from an accountant just last week in Melbourne who was sitting with a client. The client, when presented with the report, said, I could have done that myself by printing the report straight from zero. Where are you adding value here? And so as these things converge, we need to start having different answers for our clients. And we need to think about how we can have a different process to truly add value to our clients. What this is doing is cutting out the middleman. And if you are the middleman, as accountants are in much of what we do, then that's a reality. You know, commoditization means what? Well, it means that others can do the things that we do, and often they'll do that at cheaper prices. And you're seeing that right now with the outsourcing that's happening. We're seeing that now with accounting firms in Australia getting ethical clearance letters from accounting firms in India. And this is happening. And we know of 3 examples where that's happened already. With the simplification, not an immediate issue, but the wheels are turning slowly. With the cloud accounting, the providers are throwing enormous amounts of money at that. And you see changes happening on a regular basis with that. And so we need to make sure that we're not positioned as the middleman that's going to become extinct and marginalized. And what else is happening here? Well, I see some accountants now, and I've started to see this in New Zealand, and it's now starting to happen in Australia as well. I see accountants going to market with a very, very different value proposition. It's a value proposition that says, we will do your work cheaper and we'll provide more service. And so that's pretty compelling. You know, if you're the client and you're with an accountant who adds very little value, then why wouldn't you go to someone who offers a cheaper price and offers more service at the same time? And how are they doing that? Well, to be a client of the firm, you must be on a cloud accounting solution, and we will outsource the processing of that work so they can deliver the processing work at a very economical rate. And then they put on good accountants with interpersonal skills who are great with clients, who get out there and meet with the client 3 or 4 times a year to add value to that client relationship. And it's a very, very interesting model. And I think what we need to think about is how can we counter this? How can we counter this model? But, you know, it's not all doom and gloom, Tim. It's not all doom and gloom at all. We are operating here in Australia in a $16.7 billion industry, according to the latest IBIS World Report on the accounting industry. If you add in New Zealand, I suspect we're talking $20 billion in fees generated by the accounting profession. So this is a chunky number. It's a pretty chunky number. The interesting thing is that according to that IBIS World Report, the accounting profession grew at 2.2% in the last financial year. That actually goes against what we observed in our benchmark report, where we saw profit per partner declining for the first time ever over the time that we've been compiling that report. And I think the reason for that is that of the 16.7 billion that's reported as being income generated in Australia by the accounting profession, 20% of that income is owned by the Big Four. And so this is a classic example, of course, of the Pareto principle. And so 20% of that income owned by the Big Four, if you do the numbers on that, they grew at 10%. The Big Four grew at 10%. What that means is that the 80%, being the rest of the profession, had flatline growth. Flatline growth. Those of you with medical clients will know flatline is not a good place to be. And so we need to do something about this. The way I look at this is simple. You know, there are 2 million small business owners out there. So 2 million active small businesses in Australia, and you know, a few 100,000 in New Zealand we can add in. And if we've got people on the line in the United States today, as I think we have, then you know you can multiply this number by a huge amount. We've got lots and lots of small business owners out there. It's my contention that they are much better off dealing with a small to mid-sized firm of accountants than with a Big Four firm. And if we have any of the Big Four on the firms, Big Four on the line today, then I apologize. But you know, our focus is predominantly with the smaller firms, and I think they relate much better to the small business owner. And so what we need to think about is what are the issues facing small business owners. And here's my experience. And as I grew up in the accounting firm I was with in the United Kingdom, I was heavily involved in delivering business improvement services to clients. And we observed 3 things within those business owners, and I don't think anything's changed since then. Number 1, common trait of business owner is they spend more time planning their holidays than they ever spend planning their business. And we used to use that line with our business owners. I never had a single business owner argue with that contention. When you put that forward to them, you know, most business owners spend more time planning their holidays than they do planning their business. What you'll tend to find is the business owner will say, you're absolutely right. We do very, very little planning around here. And I still remember to this day the very first planning session I did with a business owner. And at lunchtime in the planning session, there were 5 of them in the room. It was a family business, so mother, father, 2 daughters and a son. And the father came up to me at lunchtime and said, you know, if we get no more value this afternoon, this has been worth the money, because this is the first time in the 18 years we've been running this business that we've ever sat together and done some planning around where our business is going. And, you know, I think this is endemic across the small business sector. They need to plan more than they do. And, in fact, you know, you can probably put your own accounting firm into that bag as well. All small business owners need to plan more than they do. Secondly, many small business owners are hopeless with numbers, And so they just don't understand it. And there's a massive opportunity here to help them understand the key numbers in their business. And every single week, I hear accountants saying, I talked to the client, I had a discussion, I'm going to talk about the sort of discussion on this webinar, and we started measuring the key things in the client's business, and the client absolutely loves it because they didn't know what was going on before. Just get them focused on a small number of things and get them understanding the numbers. You can add massive value there. Thirdly, by the way, if you don't believe that, go and download this report. So AMCI 2013, this is the Australian Management Capability Index, a recent report just released in March, I believe. And what that report concluded was that the #1 issue for small business owners is the ability to understand and interpret their numbers. The number one issue, the ability to understand and interpret their numbers. Well, who better to help them with that than an accountant? So that's the second one. The third one is accountability, or lack thereof. And so in most small businesses, there is no focus or no process for accountability at all. And you can provide this accountability in a way that helps your clients get things done, in a way that provides them with focus and discipline, in a way that really gets them in the headspace of, firstly, understanding numbers, setting targets, and then taking some action to achieve those targets, and having somebody external to report into. And I think, incidentally, that the provision of accountability by just being that external sounding board is a massive role for accountants to take. Massive role. You see, inside of their organizations, all business owners, irrespective of their size, have lots of yes men, lots of yes people. What they need sometimes is someone from outside of their organization to tell them, you're not doing this right. And with a bit of courage, and by stepping up to the plate, you can do this. So you can say to the business owner, you know, from the experience that I have working with 200 business clients, I know what works, I know what doesn't work, and let me tell you, I think you're going down the wrong path here. And that sort of discussion adds enormous value to clients. So those three things, just summarize again. First of all, they do no planning. Small business owners do no planning. Secondly, they don't understand numbers. Thirdly, they don't have a process for accountability. What we have here is the ability to deliver all three. And what we can leverage off is what I called the glue earlier on in the webinar. And what I mean by the glue is just classically articulated in a survey done by CCH. And the results of that survey were in the Business Review Weekly here in Australia a couple of weeks ago. Excuse me. And what the survey said was that accountants are still the most trusted advisor. You see on the table there, number one is the accountant, followed by the financial advisor, your business partner, lawyers, bank manager, the Australian government's website, goodness knows how they get in the list, the ATO themselves, and then right down at the bottom, family and friends. And so when your client says to me, my mate Bob down the pub says we should do this, don't put too much store in that. It's by a fair margin as well. And so CCH survey goes on to conclude that 69% of SME Aussie owners manage to consider their accountant more trustworthy than the financial advisor, 79% more than family and friends. And you'll see down at the bottom there, 82% consider their accountant more trustworthy than their lawyer or solicitor. And I think this is really important. And somebody said to me the other day, I was having this discussion showing this chart, and they said, well, how do we leverage off of that? Well, I think what you need to do is to lead the client more than you do. You see, you have massive trust, and I wrote a book, in fact, in 2011 called Accountants, the Natural Trusted Advisors. It's my passion. This is what I believe. You need to live that status much more than you do if you're, you know, let's call it a typical accountant, a typical sort of reactive accountant. What we need to do is to get off the fence a little bit more, because we inherently have trust at the level where the client knows we can do the work. So, you know, at tax, accounting, compilation, auditing, whatever, those sorts of services, the client knows that we can do that, and there's a built-in assumption that we can do that very, very well. And so we don't need to earn any more trust there. It's just there. But as soon as you start to think about offering more services to clients, then you need to be aware that there's an expectation gap. There's an expectation gap as to what else you can provide if you've not done that before. So we need to build more trust. And the way we build more trust is we need to get off the fence and advise the clients and lead them to where they need to get to. And because you've already got that initial trust, then they will often follow. When we do client advisory boards and talk to your clients about what it is that frustrates them about their accountant, one thing they say all the time is, I wish they would just give us a straight answer and tell us what the best option is. And, you know, your clients are asking for that, and so that's a great place to start. And I think what you need to do is to build a bridge between the compliance services where you have the trust into other services that you can offer that will add great value to clients. And be quite assertive in how you do that. And so, you know, take control of this whole process. With that in mind, you know, I see this path of least resistance. You have the skills. As accountants, we're great at numbers. We're good at planning. We do this every day. Our clients are in dire need of this. And so the path of least resistance, as far as I'm concerned, is to say, well, how can we extend what we do right now into services that we're very comfortable in delivering that would address the issues that SME owners have? And if we get very, very focused on value when we do that, then we'll find ourselves in a great place. And so the question I often ask myself is, well, why don't clients value compliance work? And I think the answer is, and many of you have given the answer to this question as we've workshopped it with you, I think the real answer here is that it's a grudge purchase. So it's something that the client has to have done. They really don't see a great deal of value in it because, frankly, there isn't a great deal of value in it the way it's delivered by most accounting businesses. Clearly nobody on this call, but we need to get better at articulating what they can use this thing for. And put yourself again in the client's shoes. If all that happens is they drop their work in, it drops into some sort of black hole, they have no idea when it's going to come out again. You don't tell them what the price is. They get a surprise when they get the invoice. They get the accounts in the post with some sign here stickers on, and then they're told they've got to go and pay some tax. Where's the value there? And yet that's the process that the majority of the profession finds itself following. And I have this theory, by the way, that we as a profession are suffering because of this relentless drive for efficiency. And I think you can become too efficient. We've got to bring the thinking back here and think about ways in which we can bring our core service to life and then use that as a springboard into additional services that the clients will really find some value in. Yeah, there is value in compliance. Of course there is. So, you know, they can use what you produce for them for planning. They can use it to see how they're doing relative to last year. They can use it for some benchmarking if the benchmarking data is available. They can use it to satisfy bank covenants. They could use it to go and raise new finance. They can use it for insurance purposes. They can use it for financial planning purposes. So there are value points there, but you need to articulate that. Otherwise, they won't understand it. But even if you did that, you did a great job of articulating it with the clients. I reckon on the value meter, you'd be somewhere in the middle. Maybe 4, 5, 6 out of 10 in terms of how the client rates the value in your compliance work. And so what we need is a new process. Let's not just tinker around here. Let's get a totally new process that enables you in a way that you're very comfortable with to add value to clients. And so what I'd like you to think about here is how can we take this process I'm going to give you and start to implement this with clients immediately. And so, you know, don't be accountants and say, well, we're running up towards the end of the financial year, 1st of July, if you're in Australia, and we'll do it then. Just pick a date and make the date today. And every time you talk with a business client about doing their work, I'd like you to have a very different discussion with them. And the discussion would go something like this. So, John, Mary, it's that time of year again where we're going to do your year-end work, your accounting work, your tax returns, and so on. And we made the decision here at ABC & Co. that we won't be doing things the same way as we have done in the past. Okay? What we're going to be doing this year are 3 very different things. And so, first of all, rather than just doing the accounts and sending them out to you for signing with your tax returns, we'll be bringing the accounts out to you, and we'd like to explain the numbers to you in a way that will make sense to you so that you can understand what's been happening in your business. And you'll have the opportunity to ask us some questions where anything doesn't make sense. And that's, you know, if we think about that process just on its own, that will be hugely valuable, just on its own. So take the accounts out to the client, summarize it, 3 years data, tabular form, some charts, some diagrams. You'll see on this example here, I suggest keep it very simple because another tendency that we have is to overcomplicate things. And I'm on this drive, on this mission to simplify the complex. And I think we're all very, very good at that. Here's one way you can do it. So if you just focused on top line, so sales, if you focused on margins and you focused on lockup, so what's happening with debtors and creditors and stock and inventory and work in progress, they are all areas that you can have a quality discussion with the client around in terms that the client can understand. And so one thing that I just be wary of with that is the jargon. Let me talk about that in just a moment. So back to the script. John and Mary, we're going to do things differently this year. We'll do 3 things that we haven't done in the past. Firstly, we'll bring out a 3-year business performance review for you. So we will help you understand what's been happening in your business. And then the second thing we'll do is at that meeting, we'll help you put together a rough plan for the next 12 months. So you'll have something to aim for, and you'll understand what's possible in your business. And then thirdly, what we'll do is we're going to bring to you 2 or 3 opportunities that you can take and implement in your business. Okay? And depending on how comfortable you feel with this, you know, you just will dictate the language that you use. And so the language, the sort of language I like to use there is, John and Mary, as we're preparing your accounting work and your tax returns, I'm going to get together a team of my very best people, and we'll be focused just on your business. And we'll be brainstorming some ideas that we'll bring to you and present to you when we have a meeting with you. And so imagine if you did that. And imagine if you did that with every single business client over the next 12 months. What would happen as a result? Well, you know, it's not too hard to figure that out. So I think firstly, and evidence backs this up, clients would love it. They would love your new process. And we get feedback every single day. Clients saying, this is great. Clients saying, now I understand the numbers. I understand my business. And really, really importantly, clients saying to their accountants, nobody has ever spoken to me about my business like this before. Thank you for making the effort. So you're going to create value just by having this meeting. Secondly, what would happen if you took some opportunities to the clients and presented them to the client? Well, the client's going to say, thank you very much, really, it's fantastic you're thinking about me. And in some cases, they might say, can you help me with some of these ideas? You know, you're there, you're on the spot. Opportunities are going to pop up, not just for you, but for the clients. But also, I think, if you get very, very good at this, which you can very quickly, because there's nothing I've said in the last 5 minutes here that is daunting for any one of you on the line. As you get good at this, then you'll find that the process that you put in place will be a direct driver of new work that you'll get from your clients. And so let's talk about these things again. So first of all, the 3-year business performance review. And so imagine now we've done the accounts, we've done the financial statements, the tax returns. We are at the client's premises or the client's in your beautifully appointed boardroom. The numbers are on a big screen. We just have a discussion around these numbers. Have a discussion around those key numbers, around sales, around margins, around lockup. My word of warning for you is make sure you explain this to the client in terms that they can understand. And so sales is a great starting point. Everyone understands sales. But the way to present it is to say, you know, as we were looking at your numbers here, what we observed was that 2 years ago, your revenue was just short of $1.6 million. And this year just finished, it was $1.24 million. Tell me, do you know why that fall has occurred? And so you're presenting the information and you're asking the client questions. I certainly don't want you to go over-analyzing this and going to the client saying, I've researched your industry and I found out that the average growth rate is 0.8%. Don't do that. You're overthinking the whole process. Present the information. Ask the client, do you know why that's occurred? And the client can only answer one of 2 ways, either yes, I do know, or no, I don't know. And if they don't know, your next question is, well, would it help to find out why that might be? And if they do know, they're going to give you a response. And so the response might be, well, you know, it's tough times, the economy's hurting us, we're losing customers, and whichever one you choose to pick on, just ask another question. So let's say it's we're losing customers. So tell me, what's your process for nurturing your customers? Oh, well, we don't have one. Okay. Well, would it be useful if we did have one? If the client says, well, it's the economy, well, how are your competitors doing? How is the best firm that you know in this industry doing in this economy? And what are they doing differently? Your client will have the answer. This is a conversation starter. You want to get the client talking. You're going to make notes furiously as you go through this little discussion. As you move on from sales, you'll be talking about margins. And so you'll be having a discussion with the client around gross profit percentage. And so if you said to the client, your gross profit percentage was 37%, now it's 34%. Do you know why that is? Well, some clients might not even understand the question. So we've got to remove the jargon from our speech, from our language. Some will understand, some won't. So, get some little turns of phrase that trip off the tongue that enable you to communicate more effectively with the client. And so the way I present this is to say, I'd like to talk now about gross profit percentage. Can I ask, what's your level of understanding on what that phrase means? And let the client talk. And if they explain it perfectly, just move on and say, great. So last year it was 34%. 2 years ago it was 39%, 37%. And then the same thing. Do you know why that's occurred? If the client says, well, actually, it's a good question, I'm not really sure what that is, then you need something that trips off the tongue. And I would be using something like this. Well, John, Mary, that doesn't surprise me, because what I've found with many of our clients is that these technical terms are not within the remit of the small business owner. It's just not something that you focus on every day. And that's where we can really help you. And so gross profit percentage, if that falls by 3 percentage points, what that means is for every $100 of sales that you make, you're actually putting $3 less in your pocket. And that can happen because, for example, your costs have gone up more than you've increased your prices. Does that make sense? And there, right there, you've added enormous value to the client if they didn't know that previously. But once again, have a discussion. A client might say, well, yeah, I know where that's fallen. My costs have gone up. I've not been able to pass them on to my customers. And what I'd be responding with then is to ask the client, well, how do you know that? Have you tried to increase your prices? And if you have that discussion with the clients, many clients will come back and say, well, we could never increase our prices because we'd lose all of our customers. Well, I love it when I hear a client say that. And, we had many clients in our firm who said that. And then you're in a good space because you're so good analytically. You can quickly figure out at a percentage, a particular gross profit margin, what would happen if they increase prices, how many of their customers could they afford to lose before they're any worse off. And then you're in a really quality discussion. Same with net profit, same with receivables, payables, inventory. I'll just give you one quick thing on this particular example. Often your client will say, well, we have to hold lots of stock. It's just our business. We've got to do that. But if you've got 3 years data, you can push back on that sometimes. So in this particular case, you can say to the client, okay, I understand that. So you've got 299 days in inventory and WIP now. What that means is you've got approximately 10 months of sales sitting out there in your warehouse. Does that feel about right? Yeah, it does. So why is that? Well, we need to hold that much. Is that right? Well, 2 years ago, you were only holding about 5.5 months, and your sales were higher. So how do we rationalize those two numbers? We're in a discussion with the clients, and it's a quality discussion just about their business. This is how you add value, team. Every one of you on the call, on the webinar, can do this tomorrow with a client. Then we go one step further. So having analyzed all of that, we then say to the client, so tell me, we've looked at the past here. What would you like this business to look like? If you could wave your magic wand, what would you like this business to look like in 3 years' time? And the client will tell you things. Well, we'd like less pressure on cash flow. Perhaps we'd like revenue to be back where it was in 2010 and commensurate profit levels there. Perhaps they might say, well, I'd really like to be out of the business, so we need to grow it so I can sell it, set me up for retirement, whatever it might be. You ask that question, and then, because as part of your data collection process that you're going to build into your annual accounts, you're then able to flip into the next thing that you promised the client. So remember, you said you told the client we're going to put together a rough plan for the next 12 months. And to do that, if you use our Panalytics software here, the program will just rip the core data that your accounting team have put in there and the financial information, and it'll drop it into a lovely little equation there so that the client can see what are the drivers of revenue. And this is the first thing I used to focus on with business owners. So what drives revenue? And, is it customers? Do we need more customers? Do we need to get them coming back more times? Do we need to get them spending more? Is it a combination of all three? Have we got an issue with marketing, so we're not getting enough new customers? Maybe we've got net customer attrition, so we're losing more than we're actually gaining during the course of the year. Whatever it is, we need to talk the client through this equation and do so in a way that they understand. And to do that, you need to go slowly. So if you skip through this, because it's an equation, you'll understand it. If you skip through it, you will lose the client really quickly. And so in each of these black shaded areas, the black shaded areas you'll see are noted as activity. What that means is for any area that's black, you can make changes and you can test and monitor the results of those changes. And so we need to ask the client in each of those black shaded areas, firstly, three questions. So question number one is, did you know that was the number? And so if we pick on, for example, average transaction value, the number that's calculated for this particular client is $563. And so I'd be having a discussion with the client. So the average transaction value being the amount of money each customer hands over every time they do business with you, on average, is $563. So my first question, John and Mary, is did you know that was the number? Is that something you're measuring? Now, almost certainly the client won't know that. But I don't know many SME owners who are measuring that number. I don't know many accounting firm owners who are measuring the average transaction or the average hourly rates, which is sort of equivalent, or the average project value. It's not the sort of thing that gets measured, but it can make a huge, huge difference. So that's question number one, did you know? Question number two is if we got very, very focused on increasing that number, do you have some ideas that might be able to increase that number if we were to implement them? And just let the client answer. Do you have any ideas that we could implement, we could take and implement that might increase that number? And the client might say, well, we could look at pricing, or we could look at upselling or cross-selling, or maybe we need to talk to some of the sales reps because some of them are doing really well and others aren't. So let's figure out what the good ones are doing that the others can learn from. Whatever it is, just note it down, make some notes, say, great. Then we go on to number three. Number three is if we got focused on that number and we were able to test some of those ideas, what do you think you could get that number up to? And the client might say, well, I think we should aim for $600. So that's how you come up with the numbers to put into each of those boxes. And when you multiply it all out, and you're going to click on the reveal button that's in the application, you'll be able to say to the client, you know, what we're talking about here is an increase in profitability every year in the order of $104,000, an increase in the value of your business when you come to sell it of around about $300,000, and freed up cash flow of nearly $700,000 if we can do all of these things together. How do you feel about that? And now the client has, you know, firstly they're saying, well, we've never done this before, this is great. Secondly, they're saying, I've got a plan, if I take that and implement it, that's going to make a huge difference. But thirdly, they're thinking, how do we do this? This is great. Okay? Now, as you're having that discussion, that's where you'll be dropping in the opportunities that you've identified. You just drop them into the discussion. And so, going back to the equation, if we got focused on that average transaction value number, as you're having that conversation with the clients, you might say, Jeremy here, who I brought along to the meeting, one of the smartest people we have on the team, he came up with an idea that you might be able to implement there. And you just present the idea to them. So just drop it into the conversation. And we know, by the way, that every time accountants sit with a set of accounts, a 3-year business performance review, and some knowledge of the client or the industry, just basic knowledge, and they present that to a team of people internally, every time you'll come up with 5, 6, 7, 8, 10 ideas that you could take to the clients, every single time. And yet, what stops us doing this, I think, is this fear of what if the client says, now what? What do we do now? And just imagine yourself in that meeting. So you've gone through that process. You've given them some ideas. You've presented the numbers. You've given them a rough plan. What if the client says, this has been great. How can you help us make this reality? What do we do next? And this is where we fall down. But I don't think we should fall down. I've been thinking about this a lot recently. I think accountants are the Susan Boyle of the professional services industry. And what I mean by that is you're the best-kept secret. And you've got great skills. I mean, who else can look at this spreadsheet and very, very quickly figure out the key issues that are pertinent and put that into a format that the client can understand? Okay, we're very, very good at that. So analysis and interpretation, we should do more of it. We're very, very good at meetings. We have meetings every single day. We're good at facilitating them. We're good at getting outcomes, and don't underestimate how good you are in this area. You know, if I look at any one of your calendars today, you'll no doubt have lots of meetings in there. You get through them, you get things done, you get outcomes, you make decisions, and off you go. And so I think we need to stay close to these issues here. So what I'd be suggesting you do is to create a core service around planning. And when the client says what happens next, my response is, well, what we do with many of our better clients is we set some time aside and we run a proper planning session with them. And then you'll talk some more about what's involved there and give the client a price. And some clients will say, that sounds great, let's do that. Okay? And then off of that, we need a monitoring service. So this is something that all of you on the line can do. You can get your accountants involved in this. The monitoring service that we roll out to our clients. And leading from that could well be a profit improvement service. And this profit improvement service is going to be all around looking at ideas in each area for growth, looking at what are the priorities, getting customers involved. And so, you know, going to customers, you as a facilitator, and asking the customer, what are the key issues here? What does this business do really well? Why do you do business with them in the first place? What would they have to do to get more business from them? What would it, you know, what do we do that frustrates you? What does this business do? What would it have to do, should I say, for them to lose your business? And so you as an independent facilitator running a meeting again can get some great feedback from customers that you can then take, prioritize, test, implement, and measure, and that's your role. Okay. Also getting involved with team members. The team are closest to the coalface. They'll often have the answers. And I had a 26-year-old accountant in the firm I was with who reported to me, and he was running these sessions with the team members of our clients, and he would put up the where we are now, so the KPIs, in terms of revenue drivers. Where do we want to go? And then have a discussion around each of those. And the team would come up with the answers. So what if we did this? Have we tried this? We thought about this 3 years ago and never implemented it. I was talking to John, our big customer, last week, and he said we should do this over here. And you'll find your clients, the business owners, at the back of the room saying, this is great. I never knew our team members ever thought about our business in this way. And you'll get some great ideas from that. And you just roll them into your monthly meetings or your monitoring meetings with your client. You test new things. You cannot help but improve the profitability of a client's business by staying very, very close to those numbers, staying close to the meetings and the planning. You're great at that stuff. All you need is a strong process around it. So planning, I don't overthink the planning session. It's really, really simple. So we've got a rough plan, as in that 12-month plan you put together. So all you need to do to run an effective planning session is to go down to the client's place, firm up on some of those numbers because some will be estimates, get the client to complete an assessment of their business, analyze the report from that, come up with some key priorities, have some good discussions, and come out with an action plan. And it's as simple as that. Now, do you need a process? Of course you do. But they're the key points that's when taken on board, you'll be able to run planning sessions. And you know, I know this to be the case. When partners say to me, Cole, only the partners can do this. Well, it's absolute nonsense. As a 29-year-old manager, I was running planning sessions with clients who've been clients of the firm for years and years. I was running profit improvement programs. Justin, as I told you, was running programs with their customers and their team members. He was 26 years old. So this is the sort of work that everyone in the firm can get involved in. That's what gets me really excited about it. Your monitoring program, you just use whatever you use. If you're using our Panalytics program, sit with the clients and have them understand the numbers. So we look at last month's numbers relative to budget. Did they achieve, overachieve, underachieve? Look at the year to date. How are they going? We look at trends. What's going on? Are we ahead? Are we behind? Are we up and down? Is there seasonality we haven't factored in? Why is that happening? And you know, as you look at the screen, you can just imagine yourself having these discussions with the clients. We just need to do more of it, and we need a systematized approach to do that. With the client meetings, there are about 80 of you on the line today are either in or have been in our coaching program, so you know exactly what to do. with these meetings. On a smaller scale, what you see on the screen there is a meeting of 8 accounting firms in one of our coaching club groups. But the same thing applies. And so if you're running a monitoring meeting with a client, get their numbers, their targets up on a whiteboard, and get the client to stand by the whiteboard and write what they actually achieved against each of those key performance indicators. If they overachieve, they write it in black. If they underachieve, they write it in red. And then you as the coach, facilitator, unreasonable friend, you ask them, why did that happen? Why did we not get our target? What have we learned here? What do we need to do differently to make sure we claw the difference back next month? And you get them focused on their projects, being the things that they said at the last meeting they were going to do to drive those numbers forward. So you're just asking them questions and get some really good, robust discussion around that, and you'll get results. Between meetings, as the client submits their numbers, and by the way, there's a project right there. If the client's books and records are not great, the first project is go and sort that out and get them onto a system where you're getting the information you need so that they can put the information straight into the Panalytics program here. As soon as that data goes in every month, you're going to get an email. And the email might say, Fred Smith just submitted his numbers, and the gross profit percentage is behind targets. And so instantly you can send an email. Hey, just keeping an eye on the numbers. I see gross profit percentage is down. Do you know why that is? Let's talk. And so proactively between meetings, you can be adding great value to your clients as well. So all you need, as I say, is a process. And so given this is a passion of mine and so many requests that I've had over the years, you know, from people saying, if we carry you around in our back pocket, Carl, it'd be easy because the words have just come out. Or can you give us more how-tos around what we do when the client says yes? What I did was I put together a manual here, and I've called it the Ultimate Guide to Delivering Value-Added Services. And in the manual, I go step by step in 40,000 words, step by step, specifically and precisely how we take the compliance service and build that bridge into offering a planning service, a planning session as the core value-added service, and then spinning off from that how we deliver a monitoring service and how we deliver each part of a profit improvement service with the clients. All systematized, all documented with the checklists, all linked back to our learning center where you've got video-based learning on every single section right there. So that's really useful, and I think you'll really love the guide. But what's going to bring this guide to life for you is a total immersion program. And I'd love you to join me on one of these programs. I'm very, very excited about offering these programs. I'll be doing it twice in the next few months. So I've called it Delivering Value-Added Services. This is an opportunity for you to lock yourself away with me running the session to truly understand how you can take these ideas and offer them as a really valuable service to your clients. And so what we'll be doing on these sessions, which run 1st and 2nd of May and 2nd and 3rd of July, if you are of a mind to book a quick flight and come up to Brisbane next week, we'll be running this session Wednesday, Thursday next week. We still have a few slots available there for you if you'd like to do that, and I'd certainly love to see you there. But equally, if you want to do it in July, then go ahead. We're taking registrations for that as well. We're going to be covering this manual in great detail. And, you know, manuals are great, but they need to be brought to life. And the key with this workshop will be that we'll go through each section of the manual. Then we'll bring it to life with role plays and with case studies. We'll bring it to life by you asking lots and lots of questions and me answering those with experiences. I'm going to bring it to life by presenting to you ideas that in the moment can help you turn client meetings around, how you can overcome objections, how you can you know, truly position yourself as someone who can add serious value to clients, even if you've never done any of this sort of work before. And when you leave that session, I think, and I'm very, very confident of this, that you're going to have so much confidence that you can do this. It's going to make a massive difference for you. See, there are 3 levels you can do here. 3 levels. Level number 1 is we say, well, that was a great webinar. I've got some ideas. We'll stick our toe in the water and see what happens. Level number 2 is if you're in our coaching club program, you can download the manual. If you're in our pro client program, you can do the same thing. But level 3 is let's get serious. And if you're the type to get serious, what you'd be saying is, well, everything that Cole talked about there with the changes to the profession, married with the opportunities that there are because of the traits of the SME, what's happening, does that align with our clients? We're going to seriously go to our clients and offer ways in which we can help them improve their business, help them improve profitability, help them grow, help them better manage their cash flow, help them with succession. You know, most succession planning starts with profit improvements. As simple as that. You know, people can't get out because their business isn't worth enough. And so by learning these skills and then taking them and implementing them, it's going to be massively valuable to you and will enable you to essentially bolt on a brand new division to your firm using the people that you have right now. And I think there's a really important peripheral benefit as well here, in that as you get your accountants involved in this process, just imagine the impact that's going to have on them. And what I mean by that is you're going to have accountants who say, wow, I've got new things to do here. This is great. I can see how we can do this. And importantly, I've got a process for doing this. Okay, very, very importantly. So question we have, and thank you, Alexi, for the question. Great question. We're already providing review and planning sessions with our clients. These services are bundled with our compliance service into one fixed price solution. Is that a mistake? Well, Alexi, it depends how you're pricing them. You know, as long as you're getting good margin, and just to give you a sense of that, I think planning session should be a minimum of $5,000, and I think a monitoring program you should be looking at, you know, somewhere around the $1,500 a month mark. And so if your fixed price agreements stack up with that sort of pricing, then that's fine. If they don't, maybe unbundle it and then resell at various price points. Give the client some options. One thing to be wary of with the fixed price agreement for the full year is scope creep. And by scope creep, I mean the client thinks that absolutely everything is involved, and that's potentially where you could run into some difficulty with that. But thank you, Alexia, for asking the question. Let me wrap up by talking about your investment in this program. It's a $1,650 investment per person. That includes GST. But today only I'm going to do a special for you. So to thank you for being a part of the webinar, what we'd like to do is to take 25% off for you if you choose to join this workshop. And so 25% off, $1237.50 per person. And to register for that, please go to proactiveaccountants.net/DVAS, which stands for Delivering Value-Added Services. So proactiveaccountants.net/DVAS. And as you're registering your details, just enter in the box where it says code, just enter webinar 25% off. And as you process that, then you'll be charged that amount. Okay. We have one final question from Bevan. Bevan says, and I'll use your language, Bevan, as soon as we ask a client to commit to $5,000, they'll tell us to piss off. Well, firstly, thank you for the question. Secondly, stop prejudging your clients. How do you know that? But thirdly, try this. So if and only if the client says piss off, what you should do is say, well, I can understand right now that you might not see the value here, but I know there's value because I'm offering these sorts of services to my other clients, and they're telling me where the value is. But what I'll do for you is, if you commit to doing this session so that you can see where the value is, at the end of the session, if you don't believe that there's been that much value, you just tell me, and we won't process your payments. How does that sound? Now, for some recalcitrant clients, they'll say, piss off again, Bevan. But I'd apologize for the language, I'm just quoting Bevan. But for others, it might get them across the line because you're taking that risk away. And really, you know, what's at stake? It's probably a day of your time, but I look at it as marketing time. If you do this, your clients are going to get great value, and you'll be leveraging into additional services. Bevan, thank you for that question, and I hope that response is okay for you. All right, so once again, proactiveaccountants.net/DVAS, the code webinar 25% off, and you will receive that value. I suggest if you're serious about this, go ahead, and I'd love to work with you. I hope you've got some value from the session today. I hope if you do nothing else that you'll change the process that you have with your clients, but I hope even more that many of you on the line will say, well, let's start something here to change the way in which accountants are perceived. Let's start something that will really help the businesses in our community and get ourselves a good, solid process and some skills to enable us to deliver value-added services to our clients with great confidence. Thank you so much for joining me on the webinar today. I trust I'll see some of you in May, others in July. Until then, the very best of luck. Thanks again, and bye-bye for now.